Hey, what's up YouTube? It's Yemi here again from SWINGTRADE, and in today's video I'm going to be showing you guys how I did 1:14 just last week, making 70% of my total account by just risking the least. So in this video I'm going to be explaining how we got about this video, so I want you to sit back and relax and enjoy, and let's go. Okay, so first of all, before we get started, I'm going to be talking about our bootcamp that we got going on. The bootcamp is going to start on Tuesday, and it's so amazing, to talk about it because if you've been on bootcamp 2.0, we, experienced more than 90% success rate with many students that came in. However, knowledge are in phases and understanding are in depth. 3.0 is going to be a whole different bootcamp. It goes for $99.99 dollars, and we have a lot of amazing um, sessions and courses to talk about. Right? People actually do not understand that what makes a profitable trader is not what you do on the chart, but it's about how you think about what you want to do on the chart. It's about your state of mind and your understanding about what you are doing on the chart, right? So that's why a lot of people, repeat the word. Forex is about, it's more of a psychological game. It's about how much clarity you have on your mind to expressing on the chart, okay? And this bootcamp 3.0 is going to take care of all of that, and it's going to dive in depth into areas that you guys do not understand or have not seen before. As you always know, in SWINGTRADE, there's always a depth to take you guys to. Okay, so the aim of bootcamp 3.0 is to establish traders who have no idea of the market, or who have idea of the market, or who have been profitable but not be consistently profitable, or who have been profitable and want to scale their profitability and want to maximize their profitability into the next level. So definitely you should look out to joining the bootcamp. Let's look at the bootcamp 2.0 and let's see some of the things that some of let's see some of the review that we got from the bootcamp 2.0. This is the bootcamp 2.0. These are all crazy reviews from people who have joined us before. So you take the time to study it so you understand that we're not here to play games at all. So it's going to be amazing. It's going to be amazing, and I've been preparing myself over the course of the year for this particular great bootcamp that we're going to be having, and I just can't wait to pour out everything with respect to the subject we're going to be talking about on this bootcamp. And one thing in SWINGTRADE that we're not just traders with results, but we're trader with understanding and with a skill of teaching to communicate our knowledge to people's understanding and to help them direct them in a way they can express it to produce results for themselves. So let's get back into the review and let's see what we did. So this was a very fantastic trade, and it's so crazy because I took this trade on my phone while I was on a trip. I didn't even analyze it on my computer, right? I analyzed it on my phone, and when I go back, I was able to transfer my analysis into my computer. So it's crazy because when you master the skill, every of your device become an asset to you, right? And who would have thought that you literally can use your phone to make 5 figures, while on a trip? And, it's really ridiculous and insane, right? So let's get straight into it. First of all, the market is, attempting a new high, okay? And I love us to look at it from the monthly time frame first. Usually I don't go to the monthly time frame except only on conditions where the market is creating a new high and I want to be able to look back into previous informations, right? These are the things you're going to learn in the bootcamp. So the first things first is I can see that the market is reaching an high, right, which is the 2015 high. In fact, the market went to break the 2015 high, and moved as much as the 2008 high, right? So it's crazy. So when the market broke this level right here, by the reasons of this candlestick, and even we had a week we anticipated this level next, this level next, right? But we are not just going to anticipate that level only. Usually when the market breaks a level like this, we would anticipate a pullback before it gains other momentum, to push to the next level. So it's really that simple, and that is what we need the monthly time frame for. So on the weekly time frame, we want to be able to see clearly. So on the weekly time frame, the moment the market start to give us a rejection like this, then we were clear that the rejection is coming. However, from the weekly time frame, it's always ideal for us to understand the structure of the market, right? The structure of the market is on the bullish side, and we have the last major low right here, and we have the last high that was broken, that was retested. So apparently, the first phase of buyer came in right here, the next phase of buyer came in right here, then the buyers that went on to breaking the 2015 high came out right here. It's really simple. It's nothing really technical. All you need to understand is the price action flow and the market flow, right? So this is where this is going to be my area of interest where I'm going to be working with. Okay, so but then my ability to connect it with what has been happening historically, right, is very necessary for my analysis. So daily time frame, which is where I started to make my decision. As you can see, I identified the last level where the market pushed. Now on the daily time frame, I was able to see something else as well. I was able to identify even the most recent level where the markets have been rejecting. So previously, you can see I found this level as an area of rejection. I found this level as an area of rejection because when the market broke the previous resistance, it jumped up, then came to form some consolidation right here, and from here it jumped up to giving us that break that we anticipated. And you can see when the market broke it right here, it gave us a very sharp rejection immediately, telling us that the market might be coming to retest. So the first area that I was able to identify, right, was very simple. Was we identify an area where we think the market is going to give us a retest, right? Which the market is going to pull back to. So for my one-on-one student, they understand when the market breaks a strong structure, right, you should be looking for the more stable resistance where the market might be coming to retest, right? So when you join the my mentorship class, I go details into some of this very, very infinitesimal things that the market does that you will never have an understanding of or even notice in the first place, right? So how did we choose this level? It's very simple. This is the more stable area of the pullback where the buyers have more confidence to continue the push to the upside, right? So at the point of this analysis, we identified the level that this is where we're going to be coming from, and the market was right somewhere around here at that point. So if we are able to find a continuation push to the downside, then we can be able to capitalize on that. So what did we do? We came on the 4 hours time frame. We already have our levels down, right? And we can see that there's something I call the push exhaustion cycle, right? And that means after a strong push, the market is going to make an exhaustion before the next phase of the push, right? So we can see this long push right here, and we can see the exhaustion coming in at this point, right? And the market was moving up to this point. So what did we do? We came back to the 1 hour time frame. So what is this level that we're working in on the 1 hour time frame? What is this level that we're working with on the 1 hour time frame? It's pretty much very simple. Is the Fibonacci level from this the Fibonacci level from this point right here to this point, then we got that level right there. But we're not just gonna take that level for it. Okay, we're not just gonna take that level for it. There might be something really interesting on that level as well that we might be checking out, and which is what, when the market was going up, the market went in structures right here, the structures right here, right? Then other structures starts to form. Then this is the first time we're going to find a break structure, so we should anticipate a pullback for the continuation move to the downside. So we got that level. So when we got that level, all we did was waited, and our anticipation was that the market is going to break this counter trend line first. The market did the break of the counter trend line. Then we wanted to see a reason for us to enter, right? And we can see right here that the market make the push and make an exhaustion, make a push and exhaustion, make a push right here and exhaustion right here to giving us a break structure right here. So when we got the break of structure, we know that boom, we're already good for a sell. So we identify our we got in after this break that happened right here. And when the pullback happened, got in right here with a stop loss about 58 pips, I believe, and I take profit about 420 pips, right? We gave us about 1:7.2, right? So the moment this happened, right, I got into my first trade right at the close of this candlestick. And the second came in after the market gave us even a deeper retracement. The moment it starts to push back right here, I got in on the second one, right? My first entry got broken even right here, leaving only one trade to run risk-free. And that is why I was able to do 1:10, right? And yeah, let the market do its job while my take profit is intact and the stop loss is intact. And immediately you can see how the market dropped, right? On just 2 candles in less than 1 hour. Yes, in less than 1 hour, after my second entry, the markets, just went bonkers and, went crazy, right? So many people must have said, oh, what news happened? To be honest, if you know me, you know that I don't really care about news. I don't really trade news. I leave that to people. Actually need to have the clarification that you are either fundamental trader or technical trader. The technical is a more sophisticated version of the fundamental trading. Fundamental trading were done by trader back in the day, but with the advent of technology, right, they're able to capture this pattern of behaviors into candlesticks so that you can be able to decipher and decode these languages so that you can be able to use this to your own advantage. So it really doesn't make any difference for me whether what news is coming out. I always see them on the patterns. I most likely know when the news is going to come out from the pattern, but I don't care about the news. I don't even bother to check about the news when I hit TP, right? So for me, I believe it's a distraction. I've been in the game for more than 8 years now, and I can tell you for a fact that this is just a distraction. Focus on your pattern. If you want to be a technical trader, it's called technical for a reason. Ability to use certain patterns, certain things from the angle of a technical point to be able to provide opportunities for yourself. So don't play yourself at all, right? So thank you so much. And this is how we were able to get it, right? Our first entry was 1:7. Our second entry was after the pullback. After the pullback right here, I can see that the market made this, broke the counter trend line right here. We got in another entry right here, which is another 1:7. While we break even the first one, rendering the first one risk-free, rendering the second one the only risk that we're gonna take, right? So I trade my personal account, so I put 5% on the line, 35% each on each trade, which is 70%, which made beyond. I'm over 200%, in my target for the month, right? So this is really, really just amazing. If I decide I'm not trading again for this month, I'm good. If I decide I'm not trading this month until later next month, I'm good. And this is the beauty of forex trading. Do I expect that this move is gonna happen so fast? No. But did I position myself in the market? Yes. And this is how you must trade. And this is what everyone must learn. You need to be able to have a clarity of what you want to do before you get into the market. Don't get into the market before you start to realize what you're going to do. What makes a good trader is their ability to have clarity of mind, clarity of sight, to transfer the clarity of mind on the chart, to use it to interpret the forex market so as to obtain and maximize the result. That is what makes a trader. Anything outside is you're just being a gambler, you're just being a struggling guy. And the earlier you seek for information, you seek for this knowledge, the better it is for you, right? And like I always said, you don't have to be my student, right? I can't take everybody at the end of the day, but anyone that you are going to take, please make sure that they don't complicate this for you. You've never had me mention anything technical, SMC, ICTs. I have no problem with people doing that, but personally, it's not my cup of tea. My goal is to trade the market from the most untechnical point of view. I've not mentioned any complicated words, neither have I spoken any sophisticated terms, right? Everything I do is just price action flow, having an understanding of what the market has done, capturing this pattern and using it to my own personal advantage. So thank you guys so much, and I'll see you guys in the boot camp, and have a wonderful rest of the week. Thank you guys so much. God bless you.